Today, we have a highly experienced real estate investor and advisor who has raised millions in capital for multiple niche segments, including industrial, multifamily, self-storage, and net lease. We're going to learn some capital raising tips as well as how to achieve 21st century diversification. My guest, Dan Kryzanowksi, on the show, coming up.
Welcome to the Wealth Through Real Estate Investing Podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and to reach the lifestyle you always wanted. And now, your host, Dwaine Clarke.
Hello and welcome back to the Wealth Through Real Estate Investing Show. This is your host, Dwaine Clarke, and today we have Dan Kryzanowksi. Dan is also known as Dan K, is with BV Capital. Dan, thank you so much for joining us on the show, and how you doing, my friend?
Awesome, Dwayne. Doing great, and I love that uplifting intro here. So feeling really good here as we break through the snow, as they used to say in the Northeast here in late March.
Absolutely, yeah. We're just trying to get some energy in, to kind of start off the week. It's Monday. I really appreciate you taking the time. I'm up here in Connecticut. You're down in sunny Texas, so it's awesome, awesome to hear that. And I'm really looking forward to this interview. Reading your background, you have a very diverse background, highly educated, involved in multiple spaces. So kind of glad to kind of pick your brain, so us as the listeners can kind of learn a little bit more, so we can have some more comfort in taking action. Before we kick things off, will you kind of start with your background, how you got started in real estate, and what is your current focus?
Yeah, absolutely. And, thanks once again for having me here. Background originally from Scranton, PA. So I played on the same Little League field as Biden and, eventually found my way to UPenn. I rode with Trump Jr. So enough of politics, but I just want to be equally weighted for all of our listeners out there. Outside of the corporate stuff, I was with GE Real Estate for a while, doing a lot of, sales and marketing initiatives. And, probably of most excitement before the 2008 financial crisis was cargo facilities. So where UPS flies into, drives out of, it was, a great experience. Spin the globe around and see where you want to fly to. And, we had some great success in South America, which made it a lot of fun. And, even though for the next few years I wasn't directly in real estate, I always had kind of my ears up that bug. And, as the world would play out, I was co-best man in a wedding. And the other gentleman, I said, "Hey, what do you do?" He said, "I flip houses." And I'm like, "Okay, interesting." And then he said, "It makes 15%. My ears sprung up. And then he said, "Did you know you can also use your retirement dollars?" And that was kind of the kickoff for a big journey for me, because I've always, thought a little bit outside of the box, not to be kind of beholden to the typical 60-40, max out your 401k, set it and forget it. I kind of felt there was more out there. And, something as simple as a small, hard money loan is what got my start here in real estate about a decade ago.
Yeah, you had mentioned there like the 60-40. That's kind of what we're traditionally taught. Most advisors just kind of suggesting that. A lot of things where right now the market is high right now, but kind of having some signals that it's going to have some issues moving forward. With that said, as you kind of transition to the real estate from kind of the hard money loan aspect over to larger asset classes like multifamily, self-storage, and net lease, can you kind of talk about kind of your current focus of like the types of projects that you're involved in now and how that can help investors, become, 21st century diversified?
Sure. I always feel there's riches in the niches, as the term goes. And, even take multifamily here, there are different subsegments. One that's been very attractive to me and I feel is going to be very profitable this year is going to be workforce housing. And, there's a lot that goes into it, but like anything, if it's a solid property, it's within a mile of highways, within, call it your pharmacy, your dollar store, potentially a school, it's a very strong investment. So, my thought is to look, for these investments, take something like self-storage, secondary, tertiary markets. It's just a lot of dollars going into anything that's deep within an MSA. And of course, anytime we've had a lot of great storage guests on before, anytime something goes public, you're going to get 20 bids in a heartbeat without folks even looking at the property. So in many ways, I don't want to say it's a no-win for an investor, but it's a bit tougher. You're pushing a bigger rock up the hill, so to say. And then kind of, especially after the experience we had in the past year with COVID, what is I'd say, meat and potatoes. So, historically it was, our parents would talk the 60-40, with the 40 being the bonds, and it probably meant CDs or a 10-year, all the different treasuries. And, I view something now, for example, take industrial. So let's think of what basically was not really affected by COVID. Something like a Floor and Decor property. They never shut down. It's Amazon resistant. Folks are always going to be doing stuff, with their properties where they need a showroom and some heavy inventory. And then you're just kind of typical run of the mill industrial park properties, whether you're making widgets. It's probably mixes also as a headquarter for 100 plus employees as more employees start coming back in person, socially distanced and health wise, of course. But these are properties that are the slow and steady. As you always share, the 10-year triple net lease is kind of the holy grail. And a lot of these properties are on that. So from an investor standpoint, and there's been many third parties that have quoted this for the past 6 months, is, what do we consider a bond wrapped in real estate, or, equity returns at a AAA bond rate level. So, when I take a step back and say 21st century diversification, the three asset classes we just talked about, I think gives you, the sizzle and the high returns, like a workforce, something like a storage, I consider dead center, or, traditional multifamily in the middle. And then for, the very, I'd say, stable risk profile, something like an industrial. And, right after there, boom, you're diversified in three segments.
Mm-hmm. Yeah, I love that a lot, and that's one of the asset classes that I work in a lot, is the net lease space. And one of the most highly demanded is in the industrial side, because you had mentioned the e-commerce resistant nature of it. People want to know that, and of course right now during COVID, there's such a dependency on e-commerce and Amazon and things like that. So now people want to kind of mix into real estate because of the hard asset, and being out of the markets. That's kind of definitely a big asset class to be involved in. And you also mentioned some tenants that are doing very well right now with that. So that good mix is very important in order to kind of have a kind of a strong future if you think about retirement, or just capital and capital preservation of that sort. And then kind of going to the next kind of topic, you had mentioned in our pre-talk regards kind of your work in Rocket Dollar. Can you tell us what that's evolved, and how investors also can get know more about that as well?
Sure. So, if anything comes out of this call, or folks are just, listening and going on their walk, I would, suggest being aware that you can use your retirement dollars to invest in private assets such as real estate. So, Dwaine and I were both we spent enough time in Connecticut. Our friends that all worked at GE Capital, the different GE groups, probably retired now. There's pools of, $500,000, $1 million plus in these old 401ks, AKA rollover IRAs. This money could go into a private real estate deal. So the good thing is it's legal. It's been around since the 70s. The thing is, there hasn't been a great, I'd say, awareness campaign in the aggregate. So, and partially was it just, as I would say, it wasn't really country club cool, because you're investing in something fun, but you were filling out paperwork for an hour. You had to find a fax machine. This is only going back 5 years ago, So what Rocket Dollar did, and, we were, kind of a bunch of oddballs, but sophisticated investors that had these self-directed accounts first, and said, how can we basically strip away all the friction of signing up, of maintaining an account, so you don't feel like you're getting, nickeled and dime, or God forbid you make a good investment and you're getting charged a higher AUM. So what Rocket Dollar is, and there's a few, I'd say, new age folks in this space, and I say this very specifically, is a checkbook control self-directed account versus more the traditional, say, custodial SDIRAs. And what's nice about the checkbook control, as it sounds, is that you have full access to your money 24/7. You can invest in what you want by regulations when you want, much like you would with your piggy bank checking account. Whereas by default, a custodian, I view it as kind of checking in with your parents. Like, they're not going to say no. They're still going, when you're a teenager, they're still going to give you the keys to the cars, but you go through the dog and pony. This is kind of like saying, listen, like, you're doing it's like you're going to the store to buy a pizza at 6 p.m. You kind of know what's going on. You've done your diligence. You're going to invest anyways. why would we preclude somebody an hour of their time just to make that investment? And then I said, from the cherry on top, it's flat pricing. There's no reason why you would feel uncomfortable if you got into the space and then 6 months later we're going to recommend to your friends. So the market has spoken. Rocket Dollar was voted one of the top 2 fintech companies in the world. We're actually the top till Shaquille O'Neal swatted us down to second place, in the pre-COVID days, speaking on stage in Vegas. But it's just a very, I think, powerful platform. And we see it more, the millennials, Gen Z, that they're naturally going into crowdfunding, investing in other things, folks becoming very savvy on, different tax strategies, whether it's the pre-tax traditional, it's a post-tax Roth, or even outside of SDI arrays, the different depreciation benefits you get as an LP. So, as I said, kind of thinking holistically and seeing what a lot of folks that have been successful with real estate, they've leveraged these self-directed accounts.
Yeah, I like that, because you had mentioned kind of the tech savvy, millennials, that it's just more for a way for them to be able to have more control and access to of their destiny as far as kind of investments. And you had mentioned also crowdfunding, which has been extremely popular. But the biggest thing for me, especially for our investor group, is the diversification and making sure not all our eggs is in one basket. Some people may want some exposure to the financial markets, but you definitely should have a good mix. And then be able to place that, have the access to be able to place that whenever you want. Can you kind of talk about? I know you have tremendous amount of experience in raising capital, work with many sponsors in all different sectors. Can you kind of give some people that are capital raisers listening to the show, as far as kind of tips for finding good partner and sponsors, and be able to find out if it's a good fit, and and things like that?
Sure. So, what's just a high level, I call it my public service announcement that, to reiterate what I shared a few minutes ago, any sponsor, I would strongly suggest making your investors, your audience, aware that they can use their retirement dollars to invest with you. And I say that not to beat the point on self-directed market, but folks that have done this over time tend to get 10 to 20% of their raise, no surprise, through retirement dollars. So, just want to make that point out there. It's, it's a very easy way to close your raise, 10 to 20% of the time quicker. For me, what I always follow advantageous is to first come in as an LP investor. And I've met so many great servant leaders out there that have provided, tremendous expertise. That said, when you do put a check with real money, you're part of the club, so to say. And not only are you going to see the inner workings, you're going to be part of some great calls. Folks are going to pick up that call, basically regardless of the size of your check. They're going to see the dedication to, oh, wow, you're interested in me. And then if something resonates, this is where, you may want to become a GP, a smaller GP, a general partner. For something like here in Texas, it's called the Texas State Securities Board has a finder, and the spirit of it is Texans raising money for Texans. And as we joked before, with everybody moving here, that just adds to the population and money. So it's something good to be aware of. And then, finally, it's what I love going back to, if you're already an LP investor, it's a natural, for myself, it's easy for me to tell my story, because I feel, wholeheartedly that, yeah, folks, everybody should consider this 21st century diversification with multiple real estate segments within a very, I'd say, common 21st century portfolio. So from here, I think where you feel, of course, the team, but also kind of the asset class, what do you want to naturally evangelize, and where may you also, whether it's from, I talked to a gentleman before, he was in mineral rights. Well, he was in the military and oil and gas. So once again, great backstory, great contacts. That's a natural lead for him to go into this hyper niche segment. So, like anything, I would also look to see where you may have an advantage.
Absolutely. And as far as kind of, I would say, like on the marketing side, building brand and building trust with, potential investors. And of course, you do a lot of education, and talking, doing interviews like this, just to kind of let people know this, even just about the Rocket Dollar that many people have even thought of before. And now they're going to start looking at it as more the education side. Can you talk about your approach to, building your network of investors, but also kind of the educational side of it?
Sure. I think it goes together. I love how you said that. I was just picturing like a yin and yang in my head, because I do think it comes from, the education side. And, the benefit here that we have, I'll call it in this Zoom world. I mean, there's been so many, I mean, you and I could probably list dozens of folks, yourself included, that have been so kind, particularly in the multifamily space, that have had very open education platforms. So whether you're learning about 1031 exchanges, just frankly, how do I get subtitles when I post my video on LinkedIn? That's been tremendously powerful from a learning perspective. And I think a lot of these communities are, because it's topical based, they are open to some investors. So I've been very humbled just from natural conversation that probably about one or two folks after each one of these will reach out to me. I know there's organizations, even the Financial Planners Association, and I realize a lot of them are kind of stuck to their Raymond James, their brand, and what they can offer. But these folks are showing an interest. Wow, what's going on in this kind of alternative, in this non-CUSIP world? And also going back to thinking of our shared ties to Connecticut with GE, folks that have been corporate 20, 30 years, as I like to say, seeing the light to see what else is out there from an investment standpoint. So for me, a lot of it has been, from a network basis. And then at the same time, with the likes of a family office or an ultra high net worth, I think Richard C. Wilson says it great. You don't want to be the guy at a conference that has sweat because you need to shake 100 hands in an hour. So I let things play out. There's a lot of money out there, and it's kind of who would you want to spend time with and vice versa. So a lot of it is who I sync, but, in every conversation, and, I do say this, in full spirit is, who, not as much what can I do for you, because of course, but who can I connect you with? I think my sixth sense is really almost like hyper segmenting people and connecting folks. So, at the very least, I feel if I can do that, as the world works, there are some introductions that just kind of come out of nowhere. But, for me, those are always the great calls to have.
Yeah, very good points there. And you can kind of take us through, I know we had kind of chatted before, you being, used to live up here in the Northeast and kind of your, things that you do. Can you kind of take us through a typical work day for you? And do you have any special morning routines?
Yeah, it's kind of funny now. We're blessed here in Texas with great weather. So the kind of the COVID-15 excuse, you can't keep that on anymore. So, do a great workout. But yeah, I mean, even from, and I love, all of your comments and your talk on mindset productivity. I just say something as simple as, once that alarm, and I don't have a real alarm, I'm excited. I get up early, it could be as early as 3 a.m, 5 a.m. Do a 180, put your legs against the wall, prayer, meditation, whatever that is. And then you're literally getting the blood flowing back down into your head. So that's kind of a good way. Our little guy's up early. He just had his 5th birthday on St. Patrick's Day. So that's always, a burst of energy to kick off the day. And, being that more, you think back to when you were a 9 to 5, or when are you most busy, folks that had, I'd say, traditional, or maybe you're calling out a bunch of, doctor, dentist, lawyers. Well, they're going to be busy in the early part of the week, the early parts of the day. So I've modified my schedule, let's say on the work, especially the early part of the week. This might be more of like called a 10 to 8 sort of deal. And then as you get towards the end of the week, you're doing these early Friday calls. Texas is a bit more of a, an open state. So some breakfast tacos, social distance friendly. And, at this point, respecting my weekend time, or, just taking advantage of, I tend to have back-to-back calls on Friday, because no surprise, folks that are accredited investors busy, that's when they get a little bit of downtime or will prioritize something. But like anything, you always want to follow up, ideally within the hour, but if not, I think within, 24 hours. So taking advantage of that Saturday morning time. And, for our tech folks out there, I tend to think of things in 2-hour blocks. So a la Agile, 2 weeks, different like projects and different things I'm working on the side, that you either that this is like a high level A activity, or this is kind of a C activity that you can move around these blocks on your calendar. So, I feel that gives some value to my day.
Absolutely. Are you, I know you do a lot of networking, do a lot of educational information. Are you using any tools or resources to help you manage your day better?
Yes. Yes and no, to be honest with you. I mean, there's so much out there. I purposely made this quarter kind of a trial. So I've been fortunate to, I've used Salesforce before, I've used HubSpot, I've used Sugar, IMS is a bit more from investor management. So, trying to, figure this out. And part of it is too, is, ultimately is, who is your audience? Are you going for that 100,000 with mass marketing? Are you going more for a one-on-one? that can dictate kind of where you go to. I've shared this before, but whether you're Mac or PC, I'm a Mac guy. Something as simple as just the notes. Like Dwaine, I have one from our conversation a few months ago, and I have these crazy little, Jack Dorsey would be very proud of me. I have these little codes and little 2, 3, 4 letter codes. And the reason why I have that, like for example, 1031, tends to be a hot topic with, new president, new senator. So folks that have mentioned that, you go to the search bar and like, cool, here's 7 people I talked to that mentioned 1031. Maybe there's some good reason to connect, or I know, well, this guy's in this state and, or this type of asset class. So for me, I just like access to everything, really quickly. There's other, I think Otter is the one that gets the SRT files for your videos, which, folks are kind of watching now, or if you're with the kids at night, they don't want the sun on. That's something I'm trialing out now. And, there's a bunch of other project management, I'd say sort of softwares. But, I don't want to overly promote or, poo-poo any of them at the moment.
Awesome. Yeah, I appreciate you sharing. And also, finally, I always ask our guests, and is a word of gratitude. Can you say that you're most grateful for?
Yeah, I just been, I look back at this kind of middle stage of life and I just think great people around me. Family. I mean, the fact that we're all happy and healthy. I know it's been, a tremendous challenging year for folks, especially over the past year. So that's a huge blessing. And, I just like the folks that I tend to be around. There's a bit of humor, but there's also, a decent amount of tough love, which, I think is good. So I'm just really grateful for the folks that, have come in my life, the ones that, I'd say, you've been tremendous, leaders in all walks. Look at my mom, my wife also, she's doing tremendous things, with, being a super mom, being self-employed, unlike me on the alt side, she's the stock market queen of the house and everything. And, in our little pod here in Austin, Texas, we just have a lot of great groups of folks. And, as Matthew McConaughey said, nobody's too good, but, you're not good for, kind of one of these things where everybody can kind of, you can come in and out to a lot of different social circles and ideas and everything else. So, I just feel I've been right place, right time in my life, and really grateful for that.
Awesome. And then finally, we'll make sure to have all your information in the show notes
Yeah.
so we can send out to our network. But what's the best way to get in contact with you?
Sure. So, I mean, LinkedIn is great. And please reference that, you heard the podcast and you follow Dwaine. And then, also dan.kryzanowski at bvcapitaltx.com.
Awesome. Dan, it was a pleasure having you on. Best to you and the family. And like I said, happy birthday to the little one. And we'll look forward to connecting with you again soon.
Awesome, my friend. Great to see you.
All right. Take care, my friend.